Hey guys, in this video, I'm going to show you how to create an estimate in QuickBooks Online in under 2 minutes. And then as a little bonus, I'm going to show you how an estimate differs from an invoice as far as the reporting, and I'm going to show you how to convert the estimate into an invoice and then show you how it is then reflected on the books after you convert it to an invoice, okay? All right, let's get to it. I'm going to start my timer. We got 2 minutes starting now. Here we go. We're in QuickBooks Online main screen. Let's go to Sales and Estimates. We shall click the big green button, Create Estimate. We're going to choose a customer, Amy's Bird Sanctuary. We're going to choose the estimate date, which is when I probably would have sent it. Let's just say the 1st of this month, and let's just say it will expire at the end of this month. All right, accepted by and accepted date. Those will wait until the customer sees this and reviews it, decides if they want to accept it or not. Okay, tags, ignore those. They're going away next month. Here we go, product and service. Let's do design. Let's choose, let's say 40 hours of design work. That's $3,000. We will charge tax, and we have California state tax, whatever it is. Let's say Tucson, okay? Here we go, Tucson, Arizona. And if I wanted to add any things to the customer, thanks, smiley face, messed up there, doesn't matter. We're going to check on customization. Everything that I see here is fine. Everything looks fine, okay? And discounts and fees, I'm not adding any of these. Still, this is fine. Design, if I wanted to change the color, I could, but I'm not going to. Blue's good. If I wanted to schedule it for printing later or sending later, I could change those here, but I'm not. I'm just going to send it right now. Customer reports, if you wanted to go check out your open estimates or the other transactions before you completed this, you could. But we're good, so what we're going to do is review and send, okay? Now, at this point, you're going to have the opportunity to check out how this looks. If this was a live account, then you would see it here and you could do send estimate. Okay, so I'm not going to do that. I'm just going to save it. Right now it's pending. I'll go edit and yada, 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 save and close. Okay. All right, cool. So we have our estimate here, and that was, I still have 10 seconds left. So that's under 2 minutes, right? Hey, do you have the power and the ability to look at a profit and loss and balance sheet statement at any time and know instantly if there is something wrong? Well, let me give you that power. Link in the description to the checklist that I use for my clients to evaluate their profit and loss and balance sheets very quickly so that they can be ready to go to the tax preparer at any point. It's free. Check it out. Let's get back to the video. Now, I want to just quickly talk about the difference between estimates and invoices, right? Because I said I'm going to convert this to an invoice. Before I do that, I just want to prove to you that this invoice is almost like a transaction sitting in the for review tab or the pending tab in your bank feeds. It's not affecting your reports. It's not on the register, okay? So what happens is if you go to your reports, standard reports, you take a look at, for example, your profit and loss here, you will see design income has not been increased by this estimate being created, okay? It doesn't matter if we're on accrual or cash, you do not see it here, okay? Also, if we were to look at our balance sheet, you will see that the sales tax has not been added as a liability. So if I come to balance sheet and I come down here to Board of Equalization Payable is the sales tax liability account for this sample company test drive account. You'll notice here that we don't see it. There's nothing for April, and that's when we created this invoice for. So now then, if we come back to sales and we go to estimates and we choose this estimate, there's different ways that you can convert it to an invoice, but let's just say the customer decided that they wanted more design hours. They increased the amount, or let's just say they want to buy something else, okay? They want some concrete for the deal, okay? So let's just say that we're going to spend another $3,000, we'll make it $2,000 on concrete, okay? All right, great. So now we have an invoice we have an estimate that has been changed, and we could review and send this again to the customer, but let's just say that the customer has already agreed to this and we're fine. So what we're going to do is say accepted by whatever, Bob Gillis, I'm just making up a name. Accepted date could be today. Okay, cool. So now then we can save and close this estimate. So here we go. The amount has changed. Again, there's nothing being reflected on the books or the registers until I go right here and I do convert to invoice. Once I've converted this to the invoice, I'll see, hey, there's our updated amounts, okay, etc. We're charging tax, that's fine. The sales tax has now gone up to $455. All right. And I could go ahead and do the same thing here, review and send. There we go. Now it's been saved, so it's on the books at this point, and you can send it if you want to. So you can review the invoice, etc. We're not going to do that right now, but trust me, if you hit send invoice after you put in your customer's name, it's going to send it to them. Okay, great. So we can hit X or we can go back, whatever it is. We have saved this invoice, so I can either save here, I can do save and close, I can just hit X, it doesn't matter. Converted, see? So this estimate has already been converted to an invoice. And if I go to my invoices, I will now see that invoice sitting right here, okay? Due in 6 days, fine. Probably should have updated the terms, but you can do that in your real example, right? Now, if I come back to reports and I go to standard reports, you will see that now on your profit and loss, design income has increased, okay? Design income increased by $3,000 because that was the line item on our invoice. Also, concrete sales, where's that at? Wasn't it concrete? Job materials. If I can't find it, then I can simply click on here. I can take a look at this invoice, all right? Anywhere you click on it, take a look at what we sold. Oh, I see, it's fountains concrete, $2,000. Concrete for fountain installation. Now, if I really needed to sort this out and see where concrete as a product is depositing to, I can go up here to my gear. I can go to products and services. I can search right here for concrete, but here it is. It's right at the top. I'll go edit, concrete, edit. I will look at where this is depositing to. Landscape services, job materials, sub-account of job materials, fountains, and garden lighting, okay? So if I come again to my reports, standard reports, and go to profit and loss, maybe not exactly the best example here. I just picked it at random, but right here, job materials, okay? And I scroll to the bottom, I will see now that there's my invoice. This is what we did. That's the $2,000 for the concrete, right? So now this invoice, because we're on accrual, is actually driving up my income. Of course, at this point, if you were to switch to cash and run this report, because I have not actually received the payment for this invoice, we aren't going to see that design income here or here, only on accrual. So there's something else that I want to show you. If we come to reports, standard reports, and balance sheet, you will see that now that this has been converted to an invoice, if we go to Board of Equalization Payable and we click here, we will see, where's my invoice amount? We should see the sales tax. So let me just see. We're on accrual. That's fine. This is my balance sheet. I'm looking for liabilities. Oh, Arizona. So because we changed it to Arizona from California or whatever. Okay, great. So here's the invoice. Here are those two items on the invoice that we are getting sales tax liability from. Okay, cool. So great. Now, if we change to cash and run the report, again, we don't see that liability, because how are you going to pay sales tax on money that you have not received yet if you're on cash reporting? If you don't understand that, don't worry about it. I'll have another video for cash versus accrual as it pertains to bookkeeping, okay? But suffice it to say, right now, we have done it. We have created the estimate. We have then updated the estimate. So we created the estimate. We sent it to the customer. They gave us feedback. We updated the estimate. Then we converted it to an invoice. Once it was converted to an invoice, it's now on the books, and it's increasing our income account and our liability for sales tax if we're on accrual. If we were to be on cash, then it won't be doing that until that customer actually pays us the money and we've received payment. Okay, the next video that I'm going to make will be the process of receiving payment to this particular invoice, and I'll show you how to receive the payment as a check, like if someone gives you a physical check, and then how to put that in your payments to deposit, and then how to actually deposit that money and do it all right, okay? All right, thank you very much, and click subscribe, all that stuff. If you want to have me help you on your books, of course, you can do so. Links in the description. Visit my website, etc., etc. Okay, until next time, hey, be the best.